So here I am in my office day after Christmas. This is pretty much still holidays for me. We've just finished with our friends and relatives a couple of wonderful, wonderful days. It's just been fabulous. However, all had the same concern my clients have. Most of my friends are my age, keep that in mind, and we're concerned about preserving our wealth. Now, the general theme is the fact they keep asking. I keep telling them that they need to talk to their professional, their stockbrokers, their financial advisors, and find an exit strategy that works for them. Markets do not go straight up, and they don't go straight down. You're going to have a lot of volatility in between, and it's going to be accentuated by lots of sell programs, lots of margin calls, and you're going to have some trading opportunities. Now, for us, that means you're going to have some exit points that are going to be pretty advantageous. You should expect this is a really oversold marketplace, and you should expect that you're going to see some really huge volatility come in, and it's going to give you an opportunity to maybe trim some of your portfolio. But you need to talk to your professionals as to what's a good exit point for you, because each one of you has different goals and settings than I have. And I want you to talk to your professional. I'm more than happy to brainstorm with you and help you with anything we can, but you need to talk to your professionals, and if you want to get them involved with us, we're more than happy to talk with you on that. Now, keep in mind that the bear market is probably upon us. We've been making forecasts. That forecast has become fact. We've been talking about a slowdown. Now, I don't know how slow it's going to get. Could it go into recession? Yes, it could go into recession. It has to become a slowdown first and then become a recession, but I'm not making a recession call quite yet. Now, the Richmond Fed just came out the last few days, and Richmond Fed, of course, there's 12 Feds in the United States. The Richmond Fed district is a pretty industrial district, and they just had some of the worst data they've had in years. Now, they just had, I have to tell you, the shipments from Richmond just fell from a positive 12 to a negative 25 in one 30-day period from 1 month to the next. This is at a historical, it's never been that low before. Local business conditions have dropped from a positive 5 to a negative 25 in 30 days. And backlogs for orders has dropped from a positive 15 to a negative 18, and inventories are rising. These are not good signs of a robust economy. This is signs of an economy that's slowing drastically and fast, and it's plunging. So put these two together is that you're going to have some real volatility, but risk has entered the marketplace. Now, we've also talked about the fact that you're going to have an opportunity somewhere along the line to refinance or to take some cash out of your properties that you own. You're getting into that window of opportunity. I don't know how long that window will be open. I know long-term rates are going to go up and go up substantially. At the moment, they backed maybe almost half a point. I think we're looking at a 10-year 2 3/4. It was up to 3.3. That's a pretty sizable move. So you may want to take advantage of that. So here's the things I want to leave you today. It's not a long video. Is that volatility has entered into the stock market. You can expect some really pretty heavy days. It's going to give you an opportunity to trim your portfolio. Talk to your professional as for an exit point as to what's good for you. You're always welcome to involve us. We're really good at what we do. We're starting to see the economy slow down drastically. And this is, of course, we see it around the world. You're going to start seeing turmoil around the world, and it's coming to our shores. So we definitely have a global slowdown. Is it going to become a recession? You have to have a slowdown first, then it becomes a recession. And 3 is that we have interest rates for long-term mortgages are dropping radically. You're starting to see what they call a rate inversion. So you might want to take advantage of that and take some cash out of a couple of your properties, but don't spend that money. This is opportunity money. We're going to make a fortune. We're going to do really, really well. Not yet, but we're going to. So any properties that you don't like, any marginals, you really got to get rid of them. So my best to you. Happy holidays. Bye-bye.